Hey everybody, Colin Plume, CEO Noble Gold Investments, here with my buddy Micah and our analyst business person who's going to get into the weeds. I think I would say you get into the weeds in terms of some of the data. And by the way, I will say that like we are jam packed today. We have so many interesting things to talk about. I'm excited. Lots happening in the gold and silver market. So I'll hand it over to you. Let's get rolling, Micah. What do you got going
Sounds
on? What do you
great.
got lined up
Yeah,
for us?
so we are going to cover some of the more topical news in the gold space. Of course, the last month or so, we've been seeing a lot of movement from London to New York in terms of the gold holdings that are being repatriated. Some speculation there. We're going to get into it. It's actually really fun, and a lot of cool stuff happened over the weekend that we'll cover. So let's just jump right in. Colin, as you know, we have been kind of under the specter of looming tariffs the last few weeks. And there's been a lot of movement in the gold space. Predominantly what we're seeing is a movement of physical gold from the LBMA, or one of the two main primary physical exchanges in the Western world. So you've seen a flight of gold out of London and coming into New York. And if we just move on from this page here, we'll be able to see some of the headlines covering this stuff. So it's just been all over the place, lots of speculation. Again, primarily what's been suspected is that it's the tariffs that is causing people to repatriate or get their physical metals holdings that are elsewhere in the world, get them back onto U.S. soil. A lot of this stuff would be dealers as well who are trying to maybe shore up supply before tariffs come into place. And, with tariffs, we didn't really know if gold and silver would be impacted. The 25% tariffs on Mexico and Canada being two major suppliers of gold and silver, is part of why we're seeing all this gold move, but there's actually something bigger that we'll get into. But this is just kind of a show of some of the headlines that we've seen in the last couple of weeks about this massive, unprecedented flight of gold from London into the COMEX in New York. Just to look at a couple charts here. On the next slide, you can see that green line, which is the price of gold, and that pink line, which is the change in tons in the London gold vaults. And if you look at the far right side of that chart, you see that this drop, this historic low in the amount of metal leaving London has also corresponded with a surge in price. We're back up above $2,900. We're right on the edge of 3,000, which is a huge, just kind of mental figure for gold investors to get there. Didn't think we'd see it so soon, but I don't think we're going to have any trouble getting through that. But this chart just illustrates the amount of gold that's leaving and the price increases that have corresponded with that. So there's a bit of a gold rush going on. Now, if we go to the next chart, we can see that deliveries into the COMEX in New York it's literally off the chart. Okay, so that red line on the far right, beginning this year, is the amount of deliveries and contracts that are being taken out on the COMEX. And so again, just a huge spike, unprecedented levels of metal flowing into New York. And to kind of give you a visual cue as to when this all started happening, this next slide shows you that since the election on November 5th is really when the trend started to change. And so, you're just seeing this massive trend of gold being hoovered up by the U.S. It's coming into the U.S. from all over the world, but primarily London. And there's certainly a lot of speculation about why. Again, we're going to get into that. But any thoughts or comments on this so far, Colin, just with respect to the flight of gold?
Well, I think the first thing is overall just confidence in the ETF market, right? I think what we're showing is that they don't have every ounce backed, which is something that's always been reported, because when they started running short, they said, well, we're delayed. We don't have all the gold in London. And they said it could be 4 to 8 weeks. They're still delayed on shipments. So they're still trying to catch up. And I think that's always been the thing that people have wondered is when they're buying it on the exchange, are they getting it backed by physical gold? And they've always said yes. The other thing that I always think about is when you read it, these contracts, you and I would never get our gold first, right? If it proves that they don't have as much gold and they're short and everybody just started calling in their contracts, an everyday investor would have no chance, right? I mean,
Absolutely.
we're not getting JP Morgan maybe is going to get some or other large institutions, but the everyday investor would be caught holding nothing, right? And so that's I think part of the reason that you see this movement of metal here in the US is that people are just like they want to know that this contract is back. They want to have it. They want it audited.
Mhm.
And obviously we're seeing this, there's a trickle effect here because now there's more audits to come.
Right.
So I think it's just, in this day and age, there's kind of no reason to have uh, an ETF form. You should have some physical because of this,
Yeah.
because a regular investor has no protection for this kind of event.
Yeah, you're familiar with this saying, if it's not in your hands, you don't own it.
Hmm.
And, of course, with segregated vaulting like we offer, it's not really the case. It is
Right.
yours. It is in your specific vaulted in your name. But yeah, it's kind of a game of musical chairs, Colin. It's like you own paper contracts and futures contracts and you think you've got gold, but we know that the leverage and the amount of contracts that trade at the LBMA or even at the COMEX far exceeds the actual metal that's underlying in the vault.
Right.
And, speculatively, sometimes it's talked about like 200 times the amount of physical gold that they have trades on paper. Like in silver, for example, they trade an entire year's worth of mining supply in a single half an hour. And there's no way that they're trading
Right.
800 million ounces of physical in a 3-hour window on any given Tuesday. So it's really just the paper that people think that they own gold with. But like I say, musical chairs, because when the time comes where you're expecting now to stand for delivery and you're expecting that metal, you're probably not going to get it. Now, in these contracts, you often have a clause that allows them to settle you in cash as opposed to
Right.
the metal itself. And I think we're going to see a lot of that in the coming months, which is more or less like a default and an admission that they don't have the
Right.
physical metal. Now, we're not there yet. I think what we're seeing are the early signs, which is delays and shortages, and they're stalling on delivery. And it's getting very, very interesting. And we may be getting to that point that we've heard talked about for so many years now, where the paper markets blow up and physical metals dominate and kind of, rule the day. So what's happening though is with all this metal from all over the world, primarily London, but coming to the US, again, for whatever reason that is, and we're going to get into that, we're actually seeing some supply shocks. So if we go to the next slide, these are just some recent pieces of news. So South Korea's mint has totally stopped the sale of gold and silver as their supply tightens. And then as a sales guy, someone who loves selling Arger Heraeus, and you're very familiar with their product as well, they're a fantastic LBMA approved refinery. They make some of the nicest gold bars, and again, love selling their product, but they have stopped minting the 50 and 100 gram gold bars because they just are not able to source the gold from elsewhere to be able to produce their entire product line. So these are the beginnings again of global supply shocks, and it's just again underlining and underscoring the importance of having physical now and getting it into your hands before we see further shortages. Now, interestingly, you've obviously got the spot price, and then you have what are called premiums. It's the price you pay over and above spot for actual physical gold that you own. Metalor, which is another big LBMA international refinery, they're introducing a new per ounce surcharge above and beyond their regular premiums for physical
Mhm.
gold. So again, these are just early signs that we will see shortages. And what's going on here kind of behind the scenes is actually, I think, bigger and more serious than the media certainly is letting on.
Yeah, and I think also this reminds me a little bit of there's a number of restaurants that are charging per egg now. I don't know if you've seen
Mm,
this.
No.
Yeah, because egg prices have shot up
Right.
uh, to an unbelievable level. So restaurants, what they're trying to do is they don't want this restaurant shock. So they don't want to raise an omelet from, $12 to $15. So they're just
Mm.
charging per egg like 50 cents or 75 cents.
Wow.
And it's exactly what it sounds like they're doing with the bars is they don't want this culture shock of price, but they need to keep up with the premiums because obviously it's costing them more money. When you have all this gold surging into COMEX and it's surging out of places that they would normally source for mining, because COMEX is trying to keep up with all the bars that they're supposed to have backed.
Yeah.
That means the mints are having a hard time getting inventory, and they're having to pay a premium. So they're paying a premium. So I have actually metal ore to talk about that. This is metal ore. This is like one of my
Yep.
favorite kilo bars.
Love selling them.
So yeah. So,
Love
and
to do it.
interestingly enough, the mints, it's costing them more money to make bars and coins of all, but we are, I think, at our lowest premiums since I've been in the business,
Exactly.
in 16 years. So
Yeah.
yes, people are the big boys are feeling it, but regular investors can actually take advantage of this opportunity because we've never seen premiums this low. So and I don't think it'll last.
Me neither.
Because unfortunately, what I think's happening is and not to too far from where we're going, but I'll just say this point, and then I'll let
Mhm.
you get back into it. Is that the U.S. economy is a lot worse than what people realize, and
Of
people are
course.
selling their gold jewelry and their gold bars because they need it to live, and so there's been such a demand of selling of regular people that the price of the coins and the bars have dropped.
Mhm.
But that will be temporary. And so what I think will happen is as we go through our next surge and bull run, you'll see premiums of products go up plus the price go up. And so it'll be
Yeah.
a double win. When you're in bullion like our investors are, it'll be a double win for our clients.
Agreed. Yeah, absolutely. So let's jump back into the charts here and we'll kind of keep chugging along because this all ties together really nicely. So, we're seeing record amounts of metal come in to New York, into the COMEX. And what we can see, at least from some of the data that I'm researching in, is that there's a large increase in what are called customer accounts. So this is like not regular retail investors, but it's not institutional buying. So it's almost a way of kind of covering up who the actual buyers are of these, again, unprecedented levels of metal coming into
Could
the
it be family offices? I
hedge
mean, that,
funds,
yeah.
family offices, but there's some speculation that it actually could be, and this ties into this next point about the Fort Knox audits and maybe a kind of a gold revaluation, but it could actually be the Fed or the Treasury kind of in disguise.
Mm.
And so I'm sure you've seen the news over the course of the weekend, and I just kind of screenshotted a couple of tweets here from Elon. So it happened kind of organically where he was responding to a Zero Hedge article saying, surely we audit the gold reserves in Fort Knox every year. And then this just inundation of facts now had been laid on him. The
He
reality
didn't
is
know? He didn't know that they haven't he didn't
he
know
had
that?
no clue. So one thing led to another. He thought it'd be super cool to do a live kind of walk through live stream through Fort Knox. And then what I think happened is, this first tweet of his was on Saturday. He committed to it, and actually Rand Paul had also suggested that he do it, and I think it's now official and it's going to be happening. But yesterday, so all this started percolating on Saturday, and then on Sunday, I think by the time that Elon had made a couple of calls to probably a few insiders, he realized what the truth is, which is it actually may not all be there. And so he had this funny tweet, this South Park kind of meme and it's gone, right? So we're going to get into some of the kind of finer details about what's happened with audits of Fort Knox and kind of where we're at and where we stand. So if we go to the next slide here, that's the big question, right? I think it's
Right.
maybe a 50-50 or maybe slightly tilted in worse odds that the gold actually really isn't there. There hasn't been a full audit since the 1950s. The last partial audit was in 1974. There are lots of gold holdings in Fort Knox, and there's also two other locations. There's the Denver location and the New York Fed in New York as well, where our 8,000 tons, or in and around there, that's what we officially own. They're spread across these three locations, but a lot of what's known about the content of the quality and the quality of the bars that are held is that the vast majority of them are what are called coin bars. And so during the 1930s, as you know, Colin, when they were confiscating gold from people under Roosevelt, started in 1933, they were taking all these coins that they'd taken away from people, confiscated, they melted them down, and they turned them into something called a coin bar. And I've got a helpful just chart. We won't go through it because it's like 1,200 pages, but there's a site that I found in my research. If we can blow that up a little bit.
Because it's not going to be 24 karat, because the coins that they melted down
about
were
90%. Well, yeah, and they're about 90% pure. So if we can even zoom in a little more, if not, I'll just read it off. But you've got the middle column that shows you that the gross weight of all of the bars is 272 million plus ounces. Okay. But if you go over to the fine troy ounce column on the right, it's actually a bit 245, which is about a 10-15% difference. And that's if you're actually netting out the 24 karat, the net weight in pure gold from these coin bars. And if you scroll down to the next page, these are the audit documents from the 70s that exist. You can see the second column from the right, the fineness or the purity of most of these bars is actually kind of floating around 0.9%. So is the gold really there? That's one question. And then is the gold that we have actually up to snuff with respect to what's called, kind of as an international standard, good delivery bars?
No.
Good delivery bars have to be 99.5% or more. And of course, the bullion that we sell is either 999 or quadruple nine being the standard for gold. So we may not even actually have all the gold, but we may not even actually have pure gold in the reserve.
Yeah.
So really interesting to see if they do an audit. If we can flip back to just my chart deck there.
So which means people, most of the market wouldn't buy these.
We couldn't sell this stuff to our clients, right? It would have to be refined further,
right?
And that's where the net weight would actually be a lot different.
And you just put the net weight. You didn't do the cost, right? I mean, there's a significant,
huge
cost there. So
huge cost. So if this audit is happening, and it sounds to me like it will, and I think it's in theme with a lot of what Trump's kind of administration is kind of trying to reinstill amongst the American people, is like transparency and confidence. I think he's trying to kind of reinvigorate people to have trust in their government because they are being transparent. So it is my belief that an audit will happen, but it's also my belief that they won't audit it without being able to potentially pass the audit. We have to have 8,000 tons or more is kind of my opinion there. And I think that probably leads me to believe that this could be the buying that's happening right now, the COMEX, all the metal that's coming in there. It could very well be the Treasury and or the Fed that are buying through proxies to shore up our gold reserves prior to an audit.
Right.
Okay.
But we would know because those bars would be 0.999. So we would know if it could come out later that we were buying to protect ourselves. I mean, you're right. It's the natural progression. I mean, if they're going to go through our IRS, they should go through they're going to go through all of our holdings, right? They're releasing, some of our government office leases, and they're looking at what we have, what net we have, what is our actual net. And so they're going to need to do this audit to make sure that we have what we say that we have.
Exactly.
And
you know what? I think it's bullish for gold, whether we do or we don't. If the metal's not there, I think it means that we're in a worse situation financially as a country. And it also probably means that, we don't have enough of this stuff. People don't have enough of this stuff. I could see the price exploding higher if it turns out that we don't have the gold that we've always said that we do.
Yeah.
But then if we do have it, And in the context of, like you said, auditing various federal departments, the level of transparency that's happening with Doge, something that Trump had announced, I think 2 weeks ago now, with the new Treasury Secretary Scott Bessent, is the establishment of a sovereign wealth fund. And from what we know, there's not a ton of detail right now, but they're looking to monetize certain U.S. assets, and it could be, monetizing, minerals in the ground, gold in the treasury, and this idea of actually revaluing the gold that we have and maybe marking it to market or putting a new revaluation price on it. I think that that is more than likely in this administration, is to first do the audit of Fort Knox, then figure out a new price that we want to put on gold. And I've got a chart here just following this, that shows you just some numbers. So right now, an interesting fact about Scott Bessent, he actually had been on a couple of financial interviews prior to his confirmation, and he talks openly that, he's a very successful hedge fund guy. He's worth hundreds of millions of dollars. His largest holding is gold. Like, he believes in this stuff. He knows where it's going. He understands macroeconomics. He understands the global shifts that are happening right now. And so, the idea of establishing a sovereign wealth fund in order to revalue our gold on our books right now, Colin, we use the old 1974 price of $42 an ounce. Okay, that's the last time that we had revalued the gold. It was previously $34 an ounce. And then Nixon in 74 had revalued it at 42. So it still sits on our books at that price. So if we remonetized it to $4,000 an ounce, that would provide $1 trillion of new money into the Treasury General account. Okay, so, it could be much higher than that. That would do a lot of good in terms of stabilizing our debt to GDP ratio. Essentially, you stabilize your books. You would increase, again, transparency, confidence, and even demand for treasuries if we knew that our kind of fiscal situation was healthier than it is. And so, the old gold standard, as you know, was 40% of M1 or 40% of the money supply had to be backed by gold.
Mm-hmm.
So, if we, just to put it into terms, if we had $1 billion in currency in circulation, we would always have to have 40 or $400 million worth of gold there. Well, this number is actually from Jim Rickards. If we were to get back to that 40% threshold with all the money that we've printed through COVID, I mean, we've created 35% of the money supply in the last 5 years, you would need $28,000 gold to back the amount of money that we have in circulation right now. So I think this is what's happening. I think all these things are leading up to, and we can connect the dots. Again, there's a lot of speculation, but all this gold surging into the US, they're very likely doing this for a purpose. The audit is going, the establishment of sovereign wealth fund. I mean, again, we're assuming a lot of things here, but I think it's inevitable that we see a gold revaluation and likely a return of the gold standard here in the US.
Micah, how do you think silver will react in this situation?
I think it gets pulled up. If we are repricing gold, whether it's at, again, the market price at 2,900, a higher price like 4,000 or 5,000, we're going to see, especially in some like a kind of a crazed panic buying kind of mode. If we do end up in recession, if we do end up seeing a big surge and the continuation of the bull market, if demand increases, we know that the saying of silver being kind of poor man's gold,
Mm-hmm.
it will end up dropping in the gold to silver ratio. We will see that ratio improve, but if we go to $5,000 gold, we probably hit $100 silver. Right. So it will impact. They have a price relationship. They're not always in tune. Right now, the gold to silver ratio is very high at about 90-1. But if the price of gold moves a lot, silver will get dragged up. And we do expect that gold to silver ratio will drop regardless of what price gold has. So I think the price that gold inevitably gets to will only tell us,
Mm-hmm.
how expensive silver is going to be. It's not going to be cheaper. It's going to perform as well.
Yeah, and devil's advocate. No, I appreciate that, and I wanted to ask you about one of the ideas with this revaluing gold is that they would sell gold. The U.S. could sell. That's one of the ideas. Trump
Yep.
hasn't said that.
Yep.
Besson hasn't said that. But what are your thoughts on them? Selling gold. There's a few ideas. They just go to the new value, which shows we have a lot of value and our net worth is higher.
Yep.
They do gold bonds, or they sell the gold, or maybe some other scenario that we don't know about.
Yeah, yeah. No, I think that the gold-backed bond is probably the most likely thing right now. I actually have a bit of a chart here and some information on that. Before we get to that quickly, I just want to show you this next chart, which shows us what happened the last time gold was revalued without a significant reduction in our national debt. So this is 1974. Nixon had repriced it from $34 to $42. Well, what ensued was a 200% increase over the following 2 years. Okay, so I think that if we revalue it, even if it just goes from 42 on the books right now to mark to market at 2,900, you're going to see a huge rush in gold. The price is going to spike. But with respect to gold-backed
Which is
bonds,
why you think they would revalue it at 4,000. Because that's my other question. Because you kind of put a number of 4,000. Like, do they do 4,000 because they think the price will move to 4,000? Number one, or do you price it at 4,000 because you're not going to do an audit every year, right? Maybe you do it every few years, and sort of you just anticipate future growth.
Yeah, 4,000 is also kind of a round number. With 8,000 tons at 4,000 an ounce, you get to $1 trillion of new
which creates
value.
That wealth. Yeah, that
but
wealth.
Every 4,000 would be a new $1 trillion, right? So we've got a $36 trillion debt. If we revalue gold that are currently on the books at 42 to 4,000, well, your situation basically improves only by $1 trillion, right? So we'd say, hey, fantastic news. We just increased the price of gold to 4,000. Our national debt went from 36 to 35 trillion. Like, that's not actually a huge difference, like in the grand scheme of things. But every 4,000 that they increase it by is a new $1 trillion. So at 28,000, I have to run the math, but that's 4 times, that's $7 trillion, right? So we can go, or it's over $7 trillion. So we can go from 36 trillion in debt to 29 trillion in debt, which is a reduction of 15% if we were to market at 40% of M1, which would be about 28,000.
Right. By the way, even 1 trillion or 2 trillion or anything that our debt is dropping at this point would be a positive.
Exactly. Let's stop the expenential growth.
Yeah, I mean, at some point you have to stop the bleeding, right? I mean, that's sort of the scenario. And I will say, I've been looking at this idea of them, doing this audit, and the idea, and like the people, we sell it and this and that, and it always reminds me of the 2 countries that blew it, which was Great Britain in 1999 that sold 50% of their gold, and Canada that sold a significant amount of their gold in 2016.
They hold 0 ounces, not even tons. They had 50 tons at one point in time, and now they have 0.
And they sold, so Canada sold gold at $1,200 an ounce, give or take. And then Great Britain sold gold, I want to say at like 280, 275, something like that. I mean, it was right before gold started to move up, gold. So, Great Britain missed out on 8.5% growth from the day they sold to today annually, minimum.
Yeah.
And obviously Canada, gold's more than doubled. So you had these 2 big flops, these central bank flops.
Well, and I think that that's an important part of the kind of global context right now. I mean, this is kind of a conspiracy theory, Colin, but if all this gold coming out of London eventually leads to an LBMA default, it would do horrendous things to the British economy, the British pound, and it would pretty much be a collapse of kind of that house of cards that's there. Now, we've heard all the 51st state talk where Canada owns no gold, Canada has no military, and without the US, they pretty much have no economy. Maybe the intention is to bring all this gold back, to have it revalued, to peg it to the dollar, to make gold an absolute must when it comes to countries having a seat at the global negotiating table. If you don't own any gold, you don't have a seat, right? So that actually could be part of the context for Trump actually kind of forcing Canada's hand into becoming the 51st state. But it's just crazy that you've got more gold on your desk than the entire country of Canada does. Now, they've got a lot of gold in the ground, but as far as strategic reserves go, they've got zero.
Yeah, no,
So
yeah, I mean, it's quite, and the idea of $1 trillion on the books for the U.S. with getting gold to the right price. It's baffling to me that they've never repriced gold from the $42. And I saw that they were talking about that it was just the cost, that was the reason, because it makes no sense. If you have this asset, wouldn't you want to have
wanted
the
to keep it up,
value?
at least have it marked to market, right? Where the
Yeah.
market price is reflected. But
Yeah, every 2 years, maybe you do an audit.
yeah,
It's kind of like what I always talk about, like looking at your finances. I always look at it monthly.
yep.
It's amazing that the U.S. hasn't looked at their one of their biggest assets since 1974.
Over 50 years.
Yeah, it's quite wild.
So I want to jump into just the gold backed bond. So on this next slide here, so Dr. Judy Shelton, just quickly about her, she was almost appointed to the Fed board during Trump's first term. She's an economist, PhD, super smart lady. Her new book, Good as Gold, essentially puts forward this concept of returning not to a gold standard, but to create a gold backed bond. And so she's in Trump's ear. She actually was recently appointed to the Fed board, so she's on there now. She's in Trump's ear about this stuff. And again, connecting the dots, all the gold that's coming into the US, the audit, a potential revaluation, and then the establishment of a gold-backed bond. She is proposing that we do this in time for not July 4th this year, but July 4th in 2026. That's next year, because that's the 250th anniversary of independence. And so what a better time than to launch a new golden age, as Trump has called it, a golden era with a new gold-backed bond. And the way that it works is retail investors, international investors, institutional investors would be buying gold treasuries that are essentially backed by gold. And the physical backing and the revaluation of the gold that we have now kind of ensures the credibility of the treasury, and the value that's there inspires confidence. And then it would be, as she suggested in her book, a 50-year bond. And at maturity, you would receive that equivalent in gold, adjusted for any price changes that occur during that time. So it's an interesting concept. I'm not sure I think it's like the best way forward, but it's certainly out there, and it falls right into all this other stuff that's going on. So something to monitor and something to watch, but this could be the intention of the new sovereign wealth fund and these gold-backed bonds.
Yeah, and it's interesting. I mean, I think people would want to return in the interim, and I think the exciting thing would be if you look at what a U.S. Treasury bond pays, and you look at gold's growth. I think there'd be a lot of appetite for a gold-backed. I think you'd have to make it that you could take possession of the gold. And I mean, I don't think anyone's going to wait 50 years.
Yeah. It's a long time.
It's a long time to wait for your return. But if you do a normal bond, 10, 15, 20-year cycle, and you give people a return.
Yeah. Like a coupon
year,
like to take while you're holding it. Yeah.
Yeah, absolutely. I think absolutely it would. The 10-year treasury probably drops, and you see, which actually is what we need, right? If the 10-year treasury drop because this gold back is really exciting, then the 10-year treasury goes down, which helps real estate. And then you have this demand in this other bond that we need to sell, and it's backed by something that we actually have. I think it'd be pretty exciting.
I think so too,
for people.
Yeah, and then I like the whole 250th anniversary theme. Like, I think that works well. But here's sort of the other side of the coin. If we're revaluing gold at 4,000, 10,000, 15,000, 28,000, who knows what'll happen? I think time will tell. What we need to know is that there are other countries in the world who've been buying gold hand over fist, essentially in anticipation of this moment. Now, we may need to try to zoom in here, but this is just kind of a visual cue to show you different countries with their gold reserves. So you've got us in number one with 8,000 plus tons. You've got Germany in second place with 3,300 tons. And then Italy in third, France in fourth, Russia in fifth, and China closely behind. Those guys are all more or less tied in third with around 2,200 to 2,400 tons. But we know that kind of the Axis powers, Russia, China, have been buying this stuff for many, many years at unprecedented rates. And so if we revalue gold at whatever price, it also benefits them. It also benefits anyone who owns it and holds gold. You know, to have an overnight revaluation at whatever price is an instant boost in your net worth. But it's just interesting to note that we wouldn't just benefit ourselves. We would actually be benefiting all these other major gold holders. And that kind of ties into what I was saying, where you may not have a seat at the global negotiating table if you don't have a respectable amount of gold as a country. And that could be why everyone's buying it as well. They know that it's very important.
I actually think the thing that makes it the most interesting in the grand scheme of it, which is I'm a very cautious investor. If they revalue it, let's just say at 3,000, maybe not 4,000, let's say 3,000.
Yeah.
In essence, they're kind of creating a floor, which I love.
Absolutely. Yep.
You know, and that's the thing that I've always talked about with gold is that, you know, there's only enough gold in the world to fit in 2.5 Olympic-sized swimming pools, and there's only, you know, and only the supply only goes up by 1% a year, give or take, blah blah blah. But then it's like psychologically, if they set this floor of 3,000, then it's like, okay, so that's the new floor price.
Yeah.
And I think that's always the thing that I love about gold. And it's always naturally happened because there's always demand.
Yeah.
But if the US government gives it a floor price, then I think that, well, I think everyone that has bought from us will have done very well, but also it's sort of protected their downside.
Right. And you know that over an appropriate kind of time horizon, you can't lose in gold, right? If you bought in 2000, you're up 10 times, closer to 15 times. Yep. If you bought in the last couple of years, you're still up about 30 to 40%.
Right.
So we're coming into a major, not just a bull market, but a bull era for the metals, where they will probably outperform most asset classes moving forward for the next 5 or 10 years. And so, yeah, I agree with you. If we set a floor by repricing it, like with the revaluation in 74, it could actually move really quickly. But to your point, Colin, I've got a slide after this one just to kind of give you a visual cue as well in terms of all the gold that's ever been mined, right? So it's 244,000 metric tons that's ever been pulled out of the ground. And if you divide that by the amount of people there are on the planet, 8 billion people, it works out to be about 1 ounce per person. Okay, so there's not actually a ton of this stuff to go around. And, people should look at diversifying, like you say, kind of, hedging your portfolio and mitigating risk. And gold certainly is a part of that, especially in the type of environment that we're in right now with all this stuff going on, but also the stock market and whatnot. But having some physical gold should be an essential. Like
Absolutely.
It just, whether it's 5% or you use the rule of thumb of, up to 20%, everyone needs some physical gold in their hands, in their name, that's theirs. Right.
Yeah, no, absolutely. And we got a question for the chat, and then I want to jump to Charlie Kirk real quick. Question in the chat is, if the gold isn't there, where is it? And shouldn't we know?
Yeah, I would like to say it's there. We don't know for sure. That's sort of what we're hoping to find out in an audit. If it's not there, where is it? I think that in the 60s, the late 60s, and this is when there were some tensions with Europe, I think that France and England had actually repatriated a bunch of their gold from the US. Maybe something happened around that time.
We could
But
have sold it. We could have
it,
sold it.
it may have
There'd
been
be,
sold by a previous administration, like,
yeah,
under
there'd
the
be no
table.
way. Yeah, there'd be no way for. I mean, the fact that we haven't done a full audit in 50 years, it would lead you to believe that some of it's not there. What you broke down earlier is that it's not even the right purity for
Right.
today's market.
Not
So
good delivery.
I think there's going to be some disappointment there. It just depends on what level
Yeah.
the disappointment is. And I mean, so much of it is like we've had this sort of blind faith, and also there's been this dismissive attitude with many of the governments about gold, right? I
Mhm.
mean, where they just said like we have it there, it's sort of a relic, right? It's just been this kind of pushed
Barbarous relic.
aside.
Yeah.
And if you look at a lot of the policies that have with many administrations, they've really just all they've tried to do is help just anything they can in the stock market. They've never really wanted to focus on our gold holdings. So this is the first time that we're so broke as a country that we're sort of forced to go, okay, it's kind of like a fire sale, right? At some point you have to look at what you have left
Yeah.
and go, okay, this is what we actually own. That's how broke we've gotten.
Yeah.
And anyone that's been in that situation could really, it resonates. When you go to a estate sale, right, of a house, like that's it. Like they're getting rid of everything, but they're putting all their assets out there, and they're hoping you buy, their old, microwave for $5. So I just think like you're looking at a situation where we're going to have some level of disappointment here. To what extent, I don't know.
Yeah.
And then, the how far it goes down the rabbit hole of like, okay, we don't have it. Who's responsible? Who sold it? At this point, there's been so many governments. I mean, who do you go after at this point? It's just going to be, it's just a numbers game now because we
That's it.
need assets. We need to figure out a way to get more solvent as a government. And that's why they're doing this.
Yeah.
Um,
Exactly. But I would hope that a lot of these questions, and that's a good one, will get answered over the course of an audit, which, may be happening in months' time. Who knows?
Yeah.
I mean, we'll have to see.
Yeah. I mean, I distinctly remember Ron Paul grilling the Fed
Oh,
and
yeah.
just talking about loans that they did. And I remember Bernanke saying like, well, we don't have to disclose who we've loaned money to.
Mm-hmm.
And so if they don't have to disclose like billions of dollars in loans, I'm sure that if they sold some of this gold at some point, they didn't disclose it and we wouldn't know about it. And we're going to know soon because they're going to do this. I believe they're going to do this audit. And I will tell you, if they do not do this audit, that means things are bad.
I think so too. Right. And that would probably cause a bit of a market panic.
Yeah.
So, I said this earlier, I don't think they would set themselves up to fail. I think if the audit's going to take place, they're going to pass it with flying colors. That's my opinion. And I think that could be why all this gold is again coming here now, is to shore up reserves, have 8,000 or maybe more in there. Mm-hmm. And even if that doesn't match the historical record of the gold that we had versus the gold that we've newly bought, it won't matter if we have all this stuff now. So we'll have to see where that goes. But, all this kind of raises like some very important but basic questions, Colin, which is like, why gold? Why are countries buying gold? Why have we held gold on the balance sheet? Why is it important for a country or an individual to have a certain portion of their wealth locked up in gold? And the reasons for that, as simple as they are, as unappreciated as they may be by, us who are heavily involved in this space, are the few key things. And I'll just bring up this next slide here just to kind
hold that thought. Let's go to
with the stock market at record highs. Are you confident your portfolio can weather the next big downturn? Market corrections are quick and unforgiving, wiping out hard-earned gains in an instant. Smart investors know the key to financial security is diversification. That's why Noble Gold Investments makes it easy for Americans to help hedge market volatility and diversify their investments with gold. Since 2010, central banks have steadily increased their gold reserves, and in 2024, gold prices soared over 25%. Gold is simple. You buy it, you own it, you control it. With over $2 billion in precious metal sales, Noble Gold Investments has helped thousands of investors diversify their portfolios with gold IRAs and physical gold. And now, when you open a qualified account, Noble Gold will gift you 5-ounce silver America the Beautiful coins as a thank you. Don't wait for the next downturn to catch you off guard. Visit noblegoldinvestments.com today and see how easy it is to incorporate gold into your investment strategy. That is noblegoldinvestments.com, noblegoldinvestments.com.
Is it just me here? Just give it a minute before we jump back in. Okay, it was a great ad from Charlie there, a great partner of ours. Can't say enough good things about Charlie's work. Everything he does at Turning Point USA, all of his work to help Trump. We really appreciate having him as a partner. And I think what I was going to talk about right before we cut to that break was why gold, the reasons for owning gold. And so, it's easy for me to be reminded of this stuff as someone who works in this space and who holds a lot of gold and silver. I've always said, especially to my clients, I'm an investor first and a sales guy next, right? So I believe in this stuff. I talk the talk, I walk the walk. And the reason for that is gold and silver, I'm simplifying by just referencing gold here, but the reason that countries are buying it, countries need to own it, as do individuals to protect their own financial sovereignty, is that you don't have a currency risk when you hold gold. Whether it's an ounce of gold or an ounce of silver, it's a physical commodity. It's tangible. You can't mess around with it. You're not owning dollars anymore. You own the physical metal. Yes, you can price it in dollars. You can price it in any currency in the world. You can look at the price of gold and silver in any currency. It's all pretty much at all-time highs across the board. When you own physical gold and silver, that's a form of your wealth that's now in a format that can't be manipulated through any type of currency manipulation. When you're a country and you hold gold too, there's no sanction risk. When you buy U.S. treasuries, as we saw with, hey, Colin, welcome back.
Thank you.
Hey, so sorry, is it okay if I just continue on rattling?
Yeah. Go.
So with countries buying this stuff, there's no sanction risk, which of course is something that we saw with Russia after the invasion of Ukraine in 2022. They had $300 billion worth of U.S. treasuries frozen, right? So we see China and other countries selling treasuries to now come up with the cash to buy gold so that they aren't at risk of being sanctioned and having those assets frozen or stolen. There's also, when it comes to physical metals, there's something called no counterparty risk. There's no one on the other side of this coin. It's just simply mine. I don't have to deal with a financial institution. I don't have to deal with a brokerage account. I don't have to deal with a vendor of a particular ETF. It's just straight up physical, tangible, and it's mine. And so you can go anywhere in the world. An ounce of silver or gold are universally accepted as money. It hedges against inflation, always keeps its value. And as we know, and as we're seeing just over the last year with gold and silver both being up about 40% respectively. And again, we're early innings in this bull market. We have a long way to go. We see gold and silver performing best in times of economic and financial uncertainty, which is, of course, kind of the current theme, not just here, but all over the world. And so I think that's why we're seeing this crazy gold rush. I think that's why we're seeing all the physical metal come back to the U.S. And really, our clients need to think about whatever portion of their portfolios they need in gold and silver to hedge themselves against these risks too, because it's not just for countries. Again, it's about individual financial sovereignty as well.
Yeah, no, I agree. The only thing you were saying about how it's yours, my wife would always say that it's hers. That's what she says to me. I don't know if she's here listening, but she would always,
yeah,
fine. Everything is
yeah,
how it goes.
Absolutely. Yeah. My wife's the CEO. I'm just the CFO and the treasurer.
Yeah. Next question. Gold's not there. How will it affect the BRICS currency they're making or currency of other countries in BRICS?
Yeah, I think that's interesting. That kind of goes to the point I'd mentioned earlier, where a revaluation of gold wouldn't just help us. It would help every other country that's been stockpiling this stuff. But I think we would be exposed and extremely vulnerable if an audit turns out that we actually don't have what we've claimed to have.
Mhm.
I mean, going back to that chart where we've got by and large the largest gold holdings in the world, if it's not there, I think you actually probably have a major risk, not only to the US dollar, but even just to US kind of hegemony and kind of our, our status as being the most dominant player in the world. I think that would, all of that stuff will be jeopardized and vulnerable. So I think that's going back to my point. We will not audit if we're going to set ourselves up to fail. I don't think that happen.
Yeah, and I think the BRICS, it's an interesting idea. At the last BRICS summit, they gave everybody this BRICS Pay card, this kind of credit card, which I think there was overall disappointment in that idea that they gave them this card, right? And they didn't really explain too much how it was backed, and there'd been all this excitement about them having something gold backed. I don't think people, and that's why CBDCs and all this stuff, it doesn't, we've already gone through it. We have credit cards, right? Which is sort of a CBDC in a lot of ways too, right? We already have this idea.
Yep.
People want something backed. So yeah, I think if we don't have the gold and then the BRICS come out with a gold backed currency, which, Russia and China have been the most aggressive buyers of physical gold. They also have a tremendous amount of gold mines.
Yep.
So it would be devastating for the dollar. If those things were to happen.
And in the case of China, I know that chart shows that they've got 2,200 tons of gold, but I don't trust that they actually have any less than that. They don't properly report their gold holdings. I don't think that they have that level of transparency. Like with a lot of their other economic data, I think it's all fudged. Right. So, with the amount of buying that we know has been happening with China and Russia, and let's call them like kind of the Axis powers over the last couple of years, it wouldn't shock me, and it's been a theory of mine, that they're waiting for the US to revalue their gold first, only to come out and say, thank you very much. Our official holdings are 15,000 tons for the record, right? And to come out and basically say, we've got double what you have or triple what you have, and they'll finally kind of pull the curtain back on how much gold they really own. And
so you think China is going to trump us?
It wouldn't shock the mind.
I had to say that.
It wouldn't shock the mind.
As being a dad, I mean, we live in the world of great puns and words like jokes. That. So that's all I got left in my life. It's just...
I love it. I love it.
Oh my God.
So we can maybe finish with just some quick charts. So let's just do a quick gold kind of price update. So this is kind of where we're at right now. Now I'm using just a model. Okay, this is just a model of what could happen. We don't have crystal balls. There are no results that are guaranteed. But what we're seeing right now is we're 2,900 and change. We've been on a tear in the new year, but really for the last year. Like look at the chart going back to the beginning of 2024 when we broke out above that all-time high resistance at that point at 2,100. It just shot straight up. But that the beginning point of the new year, the 2025, gold's really just been on the up and up. So we're probably going to hit resistance around 3,000. That's not far away right now. Just kind of updating my terminal here. Gold's only got to move about $70 to crack 3,000, and we could pull back there, maybe back to 2,900. But really, I think with the size and the impulse of the move that we're seeing so far, and of course we're seeing all the banks revise all of their reports in terms of the price predictions that they expect to see for gold, and we're looking at anything between 3,000 and 3,500 from the banks themselves. And in my experience, Colin, and I'm sure you actually know more kind of about this stuff than I do, but banks are really conservative when it comes to their kind of price expectations for various assets and commodities, especially. They don't normally kind of come out with these crazy numbers, like a 10 or 20% increase in a particular year for any given asset. So I'm encouraged by that. I think that if the banks are finally seeing kind of the writing on the wall, then, if they're calling for 3,200, 3,500, I think we'll actually get there. And so my guess is we'll see probably 3,000 in the next couple of weeks, probably a challenge of that 3,200 area, let's say March, April, and then we could consolidate through the summer before moving even higher. And then, of course, we just need to wait and see what happens with all this other stuff.
Yeah. Yeah, I agree with you. Yeah, and I think that Bank of America came out and said that there's a story that could happen to 3,500. Bullish retail demand, continued central bank bond. I mean, the central banks the last 4 years have been pretty steady above 1,000 tons. So they just keep saying that if that continues, and if you're a central bank, I think you're thinking to yourself, like, what other assets would I want to have? Like,
Mm.
what other things am I buying right now that I feel really confident about? And so I still think you'll see central banks continue to buy.
Yeah.
So I think we're still above 1,000 tons. Also, the interesting thing about the price movement is that jewelry sales for gold, the jewelry amount has actually dropped,
Mm.
but because of the price surge, it's still gone up. And so you haven't seen as much in the jewelry sector for gold, which is a big part of it, right? It's a big push is how much is happening there. It leads into what I've been saying, which is, I talk about it in my book, not to plug my book, but I'm going to, shameless plug.
Yeah.
Silver is an amazing opportunity. And so I think that the bigger opportunity right now is actually silver. And listen, the stories are all gold, but if you talk about the gold and silver ratio, which you talked about, and you talked about the demand, and you talk about the tariffs potentially, there's very little silver that's actually mined here relative to how much we need in the
Mhm.
U.S.
Yeah.
We really need it from Mexico. So if these tariffs continue, silver could be priced with a 25% bump if they put tariffs on that. So I think it's still a great opportunity, great price. I know someone in the chat talked about buying fractional metals and things of that nature. I would say if you can buy the real thing, buy the real thing. If silver's at a good price, buy silver. You don't have to buy anything fractional. There is smaller gold pieces that you can buy if you really want to buy gold, but really continue to buy the physical in any form that you can. The problem with gold, when you get it so small, it becomes kind of expensive. So
Yeah.
it's always better. So I would say focus on silver right now is a better way to go.
It's definitely where
Fractional you just don't, like we always talked about, you just don't own it. So
yeah. Well, it's definitely where the value is. The old adage is, buy what's cheap, not what's already expensive. Um, you know, uh, Buy low, sell high. Look, gold is the most expensive it's ever been, Colin. But I was kind of sharing this analogy with a family member over the weekend. It's like the price of gold's kind of like your age. Yeah, it's the highest it's ever been. I'm the oldest I've ever been, but I'm only going to get older. And in hindsight, it'll have seemed cheap, or I'll have seemed young. So
that's always what's happened. It's since I'm 16 years in the business. Every time I talk to somebody, every day for 16 years, someone told me gold is too expensive.
Yeah.
For 16 years. And yet when I got in the business, it was $750 an ounce.
Right.
So listen, and you don't know, I was new to the business too. So when it hit 1,000, I thought maybe it is expensive. Then when it hit 1,900, I thought, well, maybe, and then it pulled back.
Yep.
But the dynamics, the money printing that we've done, it's just, we've done stuff that's the thing. We've done things in this country we've never done. And I think in unprecedented times, things that have a limit, it's just simple math. Things that have limited supply that are in demand are going to continue to go up. And as much as I'm excited about this new administration, inflation is not going anywhere.
No.
And if you believe inflation is going to stick, then you got to have commodities. That's it. And that's every billionaire out there is saying that. I mean, this isn't just us.
And they're buyers. They're buyers, right?
They're buyers. Yeah.
Retail might be selling right now, but the biggest buying is happening at the institutional level or the high net worth level.
Yeah.
Right. And I like this saying too, which is like, price is what you pay, but value is what you get. Right. So you might be paying $3,000 an ounce for gold right now, but the value is you have an asset that has no counterparty risk, has no currency exposure.
Right.
You hold. Right.
Yep.
So all these things. So the value of gold is not really dependent on the price.
Yep.
Right. And let's go to the other chart that I had, which is a bigger picture chart for gold.
Yeah. And I think we'll wrap up after this.
Yeah, that sounds good. We'll do gold real quick, silver real quick. So this is a 40-year chart for gold. And it's now breaking out like the final overhead resistance of all these 40 years. So, it's not to say that it can't pull back. That's actually my expectation, is that it will at some point, right? So it will have to. Probably that corresponds with some kind of stock market crash at some point this year, maybe next year. That will happen. But we're now in like uncharted blue sky territory where the price of gold can go absolutely anywhere. There is no historical resistance above here. We've essentially unleashed, again, what I'm terming like not just a gold bull market, but a golden era where the metals are going to just absolutely go ballistic for the foreseeable future, 5 to 10 years. Okay. Now quickly, this next slide, just to touch on silver, which again, a much better value play here. Nowhere near all-time highs. I think we probably get there, which is around $50 later this year, maybe in the fall. But this is just what I see in the short term. We are probably going to get above that $35 mark, which we were at the end of October. Of course, we could find some resistance there, but we're in an advancing phase for silver. Like it will do this spring what it did last spring. It went from 22 to 32 in 2 months. Okay, we're probably going to go from 32 to 42 at some point over the next several months. So, the GSR is still high. Silver is still extremely undervalued. Yes, gold's doing great. It will continue to do so. But there's actually a bigger opportunity for people in silver that tends to lag. The natural lag in silver is a gift.
Micah, well, I want to say today was fascinating. Great day today. And obviously people can call you. You help people all the time buy physical metals. If you got an IRA, you have until April 15th to try to add, some gold to your IRA, or if you're doing a rollover. But yeah, if you want to talk to Micah, give us a call. Here's our website, Noble Gold Investments. Ask for Micah. He can help you. Obviously, he's big gold, silver bug. And we got into the weeds and the charts, but I can tell you that he can break it down in a simple form, and he could be your, person to help you through this journey. So check us out, call, ask for Micah. And again, my friend, thank you so much. So good today.
Anytime.
Yeah.
Thanks, Colin. Yeah, and I'm sure we'll have more exciting stuff to discuss in a couple of weeks. So
absolutely.
Really, really great time. Thanks for having me on.
Talk soon.